Great to get your perspective here before this year ends.
Thank you, Scott.
You know, what's really struck me, I think, from you specifically, is the way that your tune has somewhat changed in the recent weeks. Mm-hmm. You were more positive than most until recently, where it's sort of, I feel like you saw the writing on the wall about where we are. Can you just give us a take on where you are today, and then we'll get into more specifically of what your notes suggest could be ahead of us?
Absolutely. So yes, we did turn more negative, you know, and basically also what you mentioned, we were positive for most of the year. You know, the Fed fund terminal rate was this summer around 3%. You know, after the Jackson Hole and in September, this Fed fund terminal rate moved from 3 to 4 to 5. You know, like so between 3 and 5, there is a big difference. You know, what it implies for multiple, meaning that it does imply lower multiple. You know, and at the top of that. Earnings expectations are coming down. You know, we started also optimistic year at like 240, you know, then move it down to 225, and now we think that next year it might actually go into sort of low 200s, you know. So you have a lower EPS and you have a higher terminal Fed fund rates, meaning lower multiple most likely, you know. So that, you know, can support sort of our old price target, you know. And if you look at the market last month, you know, market's moving higher and higher, and we are at this point quite actually nervous that we would see the downside.
You still have a reasonably, I think it's fair to say, aggressive multiple on the market, given where we are now, what may lie ahead, even though earnings projections, including yours, are at 205, 20 times. That's not too aggressive?
No, so we do think that the next year will have a sort of two parts. You know, in the first part, we think actually market will go lower, will retest the bottom. You know, the question is how low and exactly when. So we think sort of at least the previous low, but most likely lower. And we think it happens earlier in the year, probably in the first quarter or maybe early in the second quarter. But after that, we think that Fed will basically fold. We think that Fed will have to change its tune completely, and then market is going to start basically pricing interest rates going lower quite quickly, and then multiple can re-rate. So basically, when our price target for the next year, we put it pretty high, I mean 4,200 for low EPS of 205, as you mentioned, we are assuming that Fed will do actually proper pivot, and then sort of 2024 will look a lot better. And at the end of next year, market is going to be looking at 24 EPS, and the Fed, which we think will sort of fold completely by then.